Hello, traders. Good day. My name is Emeka, the founder of Trading with Emeka. I welcome you today to another wonderful content. Like I told you, and I always say, we have the vision of educating upcoming Forex traders so that they can have a shorter learning curve in the business of Forex trading. All right, you're welcome once again to our YouTube channel. Please, I would like to ask that you subscribe to our channel. If this is the first time of coming to our channel, subscribe to our channel. And if you're a returning subscriber, thank you for coming by again. Try to also share our videos, like our videos. Also, kindly turn on the notification bell so that you can be alerted and be the first to know when we release new educational content. All right, they'll be coming your way from time to time. So today, without further ado, let us go straight into the subject of today. And our topic for today says the best Forex trading strategy ever. The best Forex trading strategy ever. Everyone is in the lookout for the best Forex trading strategy. The holy grail, that strategy that can give you consistent profits over time. So that is what every Forex trader looks out for. And today I want us to talk about that subject, the best Forex trading strategy ever. All right, so if I may ask, what is a Forex trading strategy? What is a Forex trading strategy? A Forex trading strategy is a system that enables traders to make money from the Forex market while managing risk effectively. Okay, so if you are a new trader, you might be thrilled. Okay, newbies are thrilled when they get into the Forex market. They click buy or sell, and they're able to make some money. Okay, without following any lay down system or procedure guiding their decision to buy or sell. All right, so but eventually you will lose your money, you will lose your account, you blow your account if you do not have a guiding rules and regulations that's governing your decision to place a trade, and that is called your trading strategy. So without a trading strategy, you will eventually lose all your trading capital while trading Forex. So that is a trading strategy. You need to know that a trading strategy, as you are aware, is vital for your profit, is vital for your consistency over time in the market. Okay, without a Forex trading strategy, you will just be more or less like a gambler. You'll be a gambler. So the difference between a gambler and a professional Forex trader is a professional Forex trader has a strategy, a laid down strategy or system which he or she uses, which govern or determine their decision to place trades in the market. All right, so now there are several trading strategies in the world, thousands of trading strategies. I know you may have used many and you are still exploring many. The average Forex trader uses over 10 or even more than 10 trading strategies before they eventually come down to settle down for one. All right, there are many Forex trading strategies, but the most common or the most popular Forex trading strategies are categorized under the following: indicator-based strategies like the EMAs, okay, the MACD, all right, the stochastics, the RSI, and the Bollinger Band, and many of them, many indicators-based strategies. I use many of them in my beginning years. All right, I use many of them. The trend line based strategies too. Trend line based strategies. Trend lines are actually imaginary lines that some traders believe price reacts to. All right, so that forms their decisions to trade. We also have chart patterns based strategy, like head and shoulders. Okay, many of them. head and shoulders, double tops, double bottom, triple tops, triple bottoms, and all the rest of that. Those are chart pattern based strategies. We have the ICT strategy, okay, inner circle traders strategy, okay, which was developed by Michael Huddleston, right? There's also the ICT strategy. We have reversal strategies, breakout strategies, and you also have the smart money strategies. None of these strategies is wrong. None of them is the best or the good or bad. No best or worst strategy. All right, but some strategies are far better than others. Any trader can make money using any of the above listed strategies. Any trader can make money if the trader manages risk and also has a good trading psychology and is consistent with the strategy. The trader should be able to make money. However, some strategies are better than others. All right, so as we proceed, you're going to understand better what I mean. Now, what makes a good forex trading strategy? What makes a good forex trading strategy? A good forex trading strategy has the following characteristics. Number one, a good forex trading strategy should have an entry criteria. What should you look out for? What should you see as a trader who uses that strategy before you enter the trade, buy or sell? There must be a well-defined entry criteria. Not entering the trade by intuition or by just because you see a buy candle coming up and you just enter into a buy, or because you see a bearish candle forming in a time frame and you just enter into a sell. No, that is not professional as a trader. So there must be an entry criteria. Also, a good strategy should have a well-defined exit criteria. Okay, what should you see in the trade, okay, that should inform your decision to leave the trade, to take your loss, to cut your loss? Because the reason why there should be an exit criteria in every strategy is that there is no 100% win rate strategy in the world. No strategy can give you 100% win rate. So that means that you should have a plan to cut your losses and leave a trade if things don't go out as anticipated. So that is why a good strategy should have an exit criteria. Number three, a good strategy should have a good win rate. In fact, a win rate not less than 40%. Any strategy that does not have up to 40% win rate might not be very, very ideal for you. Although this is a function of your risk to reward ratio of the strategy. A strategy that has 30% win rate, if you have a risk to reward ratio of 1:3, you can still be profitable. But on the average, a good strategy should not have a win rate that is less than 40%. Okay, so a good strategy should bring more money into your account than it takes out. Okay, good strategy should have a mechanism of bringing in more money to your account than it takes out in terms of losses. Okay, so also a good strategy should have a good risk to reward ratio of not less than 1:2. A good strategy should have a good risk to reward ratio. If you are risking 1% in a trade, you should be anticipating to get at least 2%, 1:2 ratio and above. Okay, so let's actually see the correlation between win rate and risk to reward. The correlation between win rates, how win rates and risk to reward, when combined or when strategically combined together, can help a trader to be profitable. All right, now when you have a strategy that has 1:1 win rate, you need to be right at least 60% of the time to be profitable. That is, you need to have 60% win rate to be profitable if your strategy has a 1:1 win rate, in the sense that when you win one, you need to have at least 60% win rate if you are using a 1:1 risk to reward ratio. That is, you are risking 1% to gain 1%. All right, So you need to have up to 60% win rate. Now, before now I said a good strategy should have 1:2 and above. 1:2 and above. All right. So we just said if you have 1:1 risk to reward ratio, you need to win more of your trades. You need to put in more work to win more. That strategy has to be winning more of your trades than it loses. And you know that sometimes in the forex market we do not control our wins or losses. It's actually a function. The forex market is a game of probability. Wins and losses come in the short term. The results of every trade is random. The result of every trade is random. Okay, the outcome of every trade is random, but in the long run, if the trading system is good and profitable, well back tested, it should be able to bring in more money and win in the long run over a large sample of trades. Okay, so if you have a 1:2 risk to reward ratio, you just need 40% win rate to be profitable. 40% win rate to be profitable. If you have a 1:3 risk to reward strategy, you just need 30% win rate to be profitable. You just need to win 30% of your trades. Even if you lose 70% of your trades, you should still be profitable if you have a 1:3 risk to reward strategy. Now, what about a 1:4? If you have a 1:4 risk to reward ratio of a strategy, you just need to win also 30% of your trade to be able to be profitable. Okay, if you have a 1:5 risk to reward ratio strategy, you just need to win 20% of your trade in order to be profitable. However, what is feasible? You hear traders telling you that they had a trade of 1:50 risk to reward, 1:100. Those are, I'm not trying to say it's not possible. It is good. It's possible, but as a trader, I advise you to have a strategy that has at least 1:2 and above risk to reward ratio. If you have a better strategy that has more than 1:3 risk to reward ratio and a good win rate of over 30% or 40%, is still okay. But personally, as we proceed, I'm going to show you how I trade and the performance of my strategy. All right, so let us proceed. Now, how to get a trading strategy? You can develop one yourself. Okay, you can develop one yourself after adequate backtesting. Backtesting actually means looking at the performance of that strategy historically over the past. How has that strategy played out when you apply the entry and exit criteria and the take profit criteria? All right, so you need to be able to know how the strategy has performed over time. Yeah, so you can also learn an existing strategy from other traders. Okay, you can adopt other traders strategy. You can learn it from them. Number 3, you can learn an existing strategy and modify it to suit your trading personality. You can learn an existing strategy and modify it to suit your trading personality. Okay, what I actually advise traders to do is that even if you get a strategy from another source, you need to internalize that strategy. You need to practice it. You need to trade it and see how it works. If it actually aligns with your values, which will actually align with your trading personality. Everybody has different risk tolerance. Okay, and also how long also different emotional capability. Some people are day traders, some are scalpers, some are swing traders. Okay, so you need to know who you are as a person and what you can do. So that will help you to be able to modify a strategy, even if you are not the originator of the strategy. That will help you to modify the strategy so that it can best work for you according to your personality. Alright, okay. So now let's say something. We actually talked about the components of a good strategy. You should also add that a good strategy should have good profit taking criteria. So that should be a profit exit criteria in terms of loss, when you should get out if what you have anticipated that the market should do will not is not playing out. You should also have where you should take your profits. Okay, the strategy should be able to inform you at this point in this trade, this is where you should take your profit and leave the trade. Okay, so that is an addition to the components of a good trading strategy. So now, how many strategies should you have? Many traders, I've discussed with several traders across the world, and they tell me they have several trading strategies which they implement, which they use at various market conditions. All right, okay, so some traders have 2 strategies, some have 3 strategies, some have several strategies they use, some have 1. Okay, but my advice to you, for if you're an upcoming trader, my advice is that you should learn one good strategy, and master it. Master the strategy, stick to it. Okay, if you want to see consistency, you need to stick to a strategy. Trade it day in and day out, and you're going to see the results you are looking for. So in order to see results, consistent results in a trading account, you need to ensure that you trade one strategy per trading account. Don't trade different. If you have 2 or more trading strategies, do not trade all of them on the same account. Okay, if you want to see consistency, you need to trade each account using a specific strategy. Okay, a specific strategy for a specific account, in order to see consistency in the consistent results in your account. All right, so what's my advice to you? Stop chasing strategies. Do this instead. What should you do? What is more important than trading strategy? Okay, if you find a strategy that has, as I said before, if you have a strategy that has at least a 1:2 risk to reward ratio and above, and at least a 40% win rate, okay, you should be a profitable trader if you do the following things. Number 1, if you master flawless execution. Execution is very important. Flawless execution of a strategy. All right, when you know the entry criteria at the back of your hands, okay, at your fingertips, you know what you are looking at for. Okay, you know the list of things, the checklist that should inform your entry into a trade. Okay, you know the exit rules of a trade. You know the profit taking rules. If you know those and you stick to them, religiously follow them, perfectly execute them, okay, without emotional bias, I tell you, your strategy will be able to give you the needed result. Also, you need to master good and consistent risk management in the strategy. A powerful and effective strategy in the hands of an inconsistent risk trader will be a bad strategy, will be a losing strategy. If your strategy is good and you don't manage your risk effectively, the strategy will not give you the edge. Your edge will be useless. Your edge will be mesmerized. Okay, that is why you need to be able to manage your risk. Master consistent risk management. You can win for 300 days, but one mistake, one trade can destroy your results for hundreds of days, for several days, 1 month, 6 months, 1 year results. One over leveraged trade can cancel all the profits you've made over a series of trades. So that is to say, you need to be consistent in your trades, in the risk you take per trade. Okay, we call it 1R. If I lose one trade, I have just lost 1R. It could be 0.5% of my account. It could be 1% of my account. It could be 0.25% of my account. But in industry standard is at least, not more than 1% of your account. The industry standard is that you shouldn't risk more than 1% of your account. So 1R can be 1% of your account, 0.5% of your account, 0.25% of your account, but not more than 1% of your account. That's the maximum percentage of loss your account should have, okay, per trade. So master good emotional control is another. Mastery of good emotional control of trading psychology is something else you need to master, you need to perfect while executing a strategy, if you want the strategy to work out for you. Again, you need to stick to the strategy. Learn all the ropes with this, all the T's, all the I's, everything you need to know to the T. You need to know the in and out of a strategy in order to see the fruit of it and be able to execute flawlessly. Mastery of execution. In fact, if you lose a trade but you are able to, you were able to follow the rules, you stick to your plan, in fact you have not lost, okay? You sleep being happy that you are a disciplined trader. A disciplined trader is consistent with risk, is consistent with execution, is consistent with exit, is consistent with profit taking. That is a disciplined trader. A disciplined trader follows his or her trading plan effectively. All right, if you can do this, you are not far from success and profitability in your trading. All right, now let me show you some of our results for the past 2 weeks. Now this is our trading with a maker Telegram group. Okay, as you can see, we're over 34,000. We're just slightly above 34,000 members. So you can also subscribe to our Telegram group channel. Is actually the link to the group is in the description box of this video. Okay, now you can see the first week of June we're in the second week. We just rounded the second week of June. Sorry, yeah, the second trading week of June yesterday. And as you can see, in week 1 we were able to make 14.5 R. We're able to make 14.5 R in summary. We're able to make 14.5 R in summary. That is to say, if you reached 1% of your account per trade, you would have been able to grow your account by 14.5%. Okay, we lost one trade in week 1 of June. We lost one trade. That was on the 31st of May. Okay, and we won about 15.5 R of our risk, and we closed with a positive of 14.5 R or percent, as the case might be. So now in week 2, that was which ended yesterday, Friday, we lost 2 trades, 2 R. We lost 2 trades, okay, and we won 14 R's, 14%. We won 14%, and our net profit was 12 R or 12% if you use 1% per trade. Okay, so this is our trading system. How our trading system is able to make us profitable regardless of losses. Every trader, every professional forex trader makes losses. Okay, we don't win 100% of our trades, and we don't claim to do so. But when we win, if we are, our trading system has we use over 1:3 risk to reward ratio. In fact, most times we have 2-3 profit targets. Okay, our TP1 is 1:3 of our trade. 1:3 reward, 1:3 risk to reward. Okay, it's 3R most times. Our first profit target is 3R. Our second profit target is around 6R and above. Our third profit target is around 9R and above. Okay, so if we lose 3 trades in a row and we win 1, most times we are profitable. If we lose 3 trades in a row and we win 1 trade, we are profitable. So if you want to learn our strategy, please, all you just need to do is to send us a DM. The link to our DM is in the description box of this video. The link to our Telegram channel is in the description box of this video, and in our Telegram channel you're going to see how you can contact the admin, how you can contact Mr. Maker. All right, so on a final note, I want you to focus on mastery of a strategy. Focus on good risk to reward ratio based strategy. Okay? Focus on mastery of execution. Focus on mastery of good risk management. Focus on mastery of good emotional control and emotional control, trading psychology. These things will help you in the long run to become professional and to become profitable and to become successful as a trader. So thank you so much for viewing this video. Please kindly subscribe to our channel, like and share our videos with others. Okay, link to our free Telegram signal group and mentorship group is in the description box of this video. Till we come your way next time, keep on succeeding, keep on developing yourself, keep on moving on. Don't give up. Even if you're not seeing results now, don't give up. Keep on showing up at the market, and over time you will see the compounding effect, successful effect of your efforts. If you want me to mentor you personally, I've told you, kindly shoot me a DM. The link is in our Telegram group, and the link to our Telegram group is in the description box of this video. Do have a lovely weekend. Bye.